On this episode of the show, I have with me Mike Collins. He is CEO at Alumni Ventures, and we're going to be talking about democratization of the venture world. And we're going to dive in there and ask Mike what that means and how that's a little bit different than what traditional VCs do, and how does this open up opportunities to people that otherwise did not have an opportunity to invest in VC type opportunities, and kind of get some more details from Mike and a couple other areas in there as well. Hopefully cover as much as we can with you, Mike. Thanks for your time.
Thanks for inviting me, Amir. I look forward to it.
Absolutely. All right, before we dive in, Alumni Ventures, give us a little bit of background.
Yeah, this company I founded in 2014 with a very different strategy. I started in the venture industry way back in the 80s, and I'm a big believer in how important it is in our system, right? Technology, innovation, entrepreneurship, and just was a big believer that this was something that more people needed to be involved with. You know, it's perceived as kind of risky and, really for institutions and endowments and the super wealthy. But I had a different take, and I have a very strong belief that more people should be involved and be stakeholders in the American capitalist system. And what we are really good at is technology and innovation and creating value through entrepreneurship. And if you look at the value, Amir, of, the big tech seven, those are all venture deals. And it is something that is singularly profound about America and our system. And we have attracted amazing people to start these companies. And I wanted to be a part of bringing it to more people.
I love that. I appreciate the intro. That's fantastic to know, and some of the context as well. I was going to ask you a question. You referenced the right now, a lot of the largest companies on earth were venture-backed companies. They have built amazing IP. America is known for innovating. I mean, it's how we've gotten here. And when you think about that, and because you alluded to that innovation and how important it is to our system, I guess as you've kind of seen this venture world and you look at how people go about it, for a lot, it's completely a black box. They have no clue. They just hear about it. They have no idea. And then for others, they have access and they're dialed in, and it's like second nature.
Yeah. There's a couple of important things to really understand. And in some respect, it's really not that complicated. It's basically investing in a company, but investing in a company that is very early in its development. And when that company grows and becomes more valuable, the company goes public or is sold, and you make a return. So in some respects, it's like owning a public stock. But there are really important differences. Number one is it is a hits business. So when you invest if you do a random venture deal here and there, that's gambling. You might as well be on DraftKings and bet on the Packers and take the points, because a lot of these businesses fail. And the whole idea of venture capital and what venture capitalists do is they develop a portfolio. And this is what we do with our retail clients, is we develop portfolios. They have at least 30 companies, and we actually encourage them to invest in multiple vintages. So you really develop a portfolio that's more like 100 or 200 companies. And so you have to view it in kind of a very different way than just buying individual public stocks. It's a lot more like buying an ETF of the S&P. There you are diversifying. And it's really even more important when you're talking about venture capital. The kind of conventional wisdom is you invest in 10 companies and 5 will go to zero. And 3 will do okay, and 1 or 2 of them will do so well, it makes up for the losers. So that's one important difference. The other important difference is this is long-term capital. This is not like, oh, I feel, I didn't really like NVIDIA's earnings last night, so I'm going to sell. And this is, you are along for the ride. You don't really have an ability to sell. Personally, I think that often is good, frankly, because the average retail investor is a human being, and human beings tend to kind of react emotionally a lot of times, and they tend to be very short-term oriented. But this is very much buying a portfolio, investing for the 3, 5, 7 years is really kind of a holding period for a particular venture investment. So it's a good match sometimes for kind of a segment of your portfolio. This is the other thing I think that is an important part of educating retail investors, which is diversification is, your superpower, and time is really an asset. So this whole idea of diversification among asset classes, so own some fixed income, own some real estate, own some public equities, own some international equities, own some private companies, and do it consistently and do it for the long term. That's really how you build wealth. And I think that is pretty obvious. Most people would agree that makes sense. It is very hard to do. And it is especially hard to do in kind of a modern society, which is, very much about today. And what's whatever the crisis of today, whether it's, AI is overvalued this week, or there's tariffs, or the government shutdown, or there's a carry trade with the yen. Listen, I live in that world too, but where I spend my time is we're dealing with an entrepreneur and a team who is trying to do something really hard, which is build an amazing new disruptive business that is solving a big problem. And that is an investment that they're committing their life to for 5, 10, in the case of Bezos or Jensen, they've invested 20 years of their lives in building these businesses. So, this is get rich slow. But it is really, I think it's important. And, so much value, Amir, today is created privately, right? I mean, we're seeing all of these companies that have huge valuations, Anthropic or Stripe or SpaceX or Anduril. These companies, have revenues, have product market fit. A generation ago, they would all be public, but they're staying private. And so all of the value is kind of being squeezed out of these companies, or at least a lot of it. If your entry point is, OpenAI's IPO at, $1 trillion, you're missing out on the first $1 trillion of value creation. So, we're trying to help educate. We're trying to help people do this in an intelligent, simple way. A lot of our clients, Amir, also love it because it is a great way to stay relevant and to learn and to know what's around the corner. We're looking at, probably one of the bigger technology changes in our lifetime with AI, and, what's coming. How's that going to impact my kids? How's it going to impact my profession? We want to help be part of that story. And there's so many interesting areas today beyond AI, right? There's incredible things going on in new approaches to energy, right? Fission, fusion. There's new computer models with quantum computing. I think there's tremendous potential in healthcare with drug discovery and personalized medicine. Education, education is, boy, if there's an area that is long overdue. We designed the U.S. educational system for an agricultural society. And so, it just, for me, it's a very exciting time to be a tech investor, a venture investor. We just want to encourage more people to, check it out and consider it.
I love that. A question you mentioned, and I do think it's interesting because for the longest time I viewed, when you listen to news about investments, it's great if you're maybe a trader. That investment, that news might affect you. But if you have a long-term horizon, that probably is not something you want to actually hear because your emotional pulls on your mind are probably too intense. When you think about the opportunity you guys are creating, and you mentioned investing longer term, think of it more as an ETF. Right now, we hear about AI. I'm sure you guys were looking at AI before right now, and you're probably looking for the next 5 or 10 AIs that are coming. When you have that mindset and you're looking to, as an individual, I can invest with you in this particular situation, that's giving me the exposure to what I'll probably only hear about once it's full steam down the highway at that point.
Yeah, it's almost a time machine. You're hearing about things today that we invested in 5 years ago, right? Kind of thing. We're investors in a company called Circle, which is in stablecoins, and went public, 6-7 months ago. And, we made that investment years and years ago. And, until kind of recently, no one knew what really a stablecoin was. So, we're investing today in things that we think can change the world, but might not really come to fruition for 3, 5, 7 years from now. So, you have to have that kind of mindset. And this is the opposite of day trading. And, and if people want to do that and that's fun and they think they have some edge over the rest of the world to do that, great. That's not our space. We know what we do, and it's meeting entrepreneurs who sometimes only have an idea and a small team and just want to get some seed money and get off the ground. And, they make progress. They may pivot 3 times before they really find it. It's a journey. But boy, is it rewarding when, you get the team that figures it out, and you have opportunities to make kind of life-changing investments, right? And if you look at the most successful investors and you really break it down, there's a couple of things that are kind of common denominators. One is time. Warren Buffett, he just was really good at his job, but he also did it for a long, long time. And some statistics that 95% of his net worth was created after the age of 65. Don't hold me to that exact percentage in age, but directionally, something like that is true. And guys like Bezos and Zuck, they compounded their own business over decades, kind of thing. So time, compounding, it's one of the wonders of the world. The other thing that is just really important is understanding that you have to diversify yourself, and you have to not know with certainty exactly how things are going to happen. And so it's really important to just have a diversified portfolio, invest regularly. And there's also what I would call kind of noise arbitrage, the ability to kind of tune out the day-to-day whenever when I'm in a board meeting and I see people like at every break opening up their stock app to see what stocks are trading on a day-to-day basis, and I get like, oh, it's green, it's good, I feel dopamine, I'm smart, but that usually is not the way to go. And I think one of the reasons people do better with their retirement accounts is they don't look at it but maybe once a quarter. And and I don't know if this is apocryphal or not, but I've also heard that this story from one money manager, and he said, somebody asked him, what category of your investor has done the best? You have a variety of funds, a variety of things. Which of your investors have done the best? And he responded, the dead ones. And what he meant by that is they weren't day trading. They were just literally, it was an account where the estate had it. Maybe it was going through a long-term thing. Maybe they didn't even know they owned it. But it just literally compounded over time. And it went through wars and ups and downs and bubbles and crashes, and just thought about these things in terms of, decades. So again, that's an extreme point that I'm just trying to make, is that, on one hand, this is the engine of the economy. This is where huge value is created. But you have to know what it is and how it is very different than trading, crypto meme stocks or, day trading on Robinhood. This is the interesting part of it. And what I try to tell people is what is exciting is these are really cool technologies, and these are really cool teams, and they're trying to cure a disease, or they're trying to do something that is really, really hard that hasn't been done. And watching their progress, you have to enjoy that as opposed to kind of, buying and selling 3 times a week.
Absolutely. Do you think as a VC that works more with individuals, providing that access, do you guys have to operate differently? Because I know a lot of people have heard of a lot of different venture capital companies. I guess when it comes to this model, does it change anything? I guess for the founders you work with, does it change anything from their perspective?
Yeah. I mean, because we are unique and our limited partners are individuals, not big institutions, part of our core idea was actually a feature and not a bug. And so one thing that's really important to understand also about venture capital is the very best deals are very competitive. And it is a fight to become an investor in those companies. And most of those companies end up with a lead investor that is one of, 100 or so top venture capital firms. And that isn't because they're smarter. It is because if you're running an amazing venture, you have your pick of capital sources, right? But the correlation still holds. So, it is all about how do you get into the most competitive deals? And what we offer an entrepreneur is we're not going to be your lead investor. You're going to go to Sequoia or Andreessen or USV or Benchmark or Lux or somebody like that to lead your round, right? That's appropriate. They're going to lead it. They're going to price. They're going to go on your board. But you're also going to bring in some co-investors that are going to take small pieces of that round. And what we say to people is we are the co-investor of choice for well-informed entrepreneurs because we have an amazing network. We have, well over 10,000 investors They're associated and graduates of, top universities. We have, Dartmouth Alumni Fund, a Stanford, MIT Alumni Fund. We have an incredible Rolodex, and we have kind of a global footprint. So we have an office in Menlo and in Boston, New York, Chicago, Tokyo, Great Britain. So, we can be helpful for you. So if it's a startup in Israel that's doing cybersecurity and we're maybe in their pre-seed round, at some point they're going to want to raise an A round, probably in the United States. We can make those introductions. They also may want introductions to, large Asian corporations who has potential customers. We have relationships with those people. So, we play to our strength, which is our network. And that really resonates with entrepreneurs because they all need help with partnerships, with new customers, help with recruiting, help with introductions. And our network is stronger than anybody. So that's how we get allocation to these deals. And the reason that we co-invest, we've done 50 deals with, many or most, if not all, of the very top name recognized venture capital firms.
Yeah, and actually, something interesting I kind of noted is just the sheer volume of deals you guys do, and and you kind of mentioned where you participate, but and it's interesting as we're going back to the democratization of this opportunity, and we're talking about, hey, somebody can actually participate in venture capital. Yeah. You guys do a lot of deals. It's not like you guys are doing a handful and that's it. You guys are, I won't quote the number. You can tell us the number, but it is a lot of deals.
It's roughly about 300 deals a year, right? And again, these are all led by lead investors. We're co-investing alongside of them. And that allows us to give our investors a very large and diversified portfolio. So it all works together. So, people come to us both for simplicity. So it's really, if you're accredited, you can participate really any way you want. You can join our syndicate and just look at it deal by deal. And some of the people that are just getting comfortable and they want to take it slow and they just want to make an investment or two to kind of test the waters, we encourage that. So it's free, no obligation. People can join our syndicate. Most people very quickly want just to build a well-diversified fund. So we have a fund that will include 25 or 30 companies that just is kind of, okay, fire and forget it. I have a nice allocation. I'm co-investing with, these amazing teams, and I feel that I'm diversifying a little bit into the future. Then there's other people who really want more hands-on, and they want to customize their venture portfolio. So, they may say, I want to participate in your AI fund, or I want to participate in your health tech fund, or your women founders fund. So we have really tried to create the flexibility for an individual to kind of play just like they would with public equities. You can go and buy an individual stock, you can buy an ETF or a mutual fund, and you can customize it based on your risk profile, your age, your interest. And we encourage people that want help kind of sorting through that or thinking through that to talk with us. So we have dozens of people that basically spend their days talking to individual investors and helping them understand it, putting together a plan that fits their particular needs. Again, we have people that are super sophisticated, and they just might have a hole in their venture portfolio, and they're saying, I'm covered, I'm in all these great funds, but I really need more international exposure in VC, or I need to do more seed investing, or our family office is really committing to supporting women. That's great. We can deal with that person. And then the person where this is their very first step, and they just want to, invest the minimum in a well-diversified fund and kind of get the feel for it and follow some of the companies and see how they do over time, all are welcome.
I love it. I think it's an interesting angle to opening up a market that, as we kind of mentioned, typically has not been open to a lot of people. I guess from your perspective, you run this fund, you have a particular mission in mind. You have a particular goal in mind. What happens with Alumni? Is it just the more investment, the more exposure, you bring in more dollars to give more people opportunity? Is that really what you're hoping to accomplish?
Yeah, I mean, our mission, it's a great question. We're 10, 11 years into our story. We've raised over $1.5 billion. We're ranked, by two groups in the last year. CB Insights and Time made us a top 20 venture fund. Probably the one name on there that you may never have heard of is Alumni Ventures, because we co-invest and keep a pretty low profile. But our next 10 years is about becoming global, and this is not, California is dead. This is just the American entrepreneurial story has won and is being replicated around the world now. So there are amazing startups coming out of Scandinavia and Mexico City and Vancouver and Singapore. About half of the really interesting startups today are not US based. And that isn't anti-American or we're losing our way. That is just everybody else starting to catch up and recognizing that if we're going to have a first world economy, we need to innovate, we need technology, we need entrepreneurship, we need to encourage the best and brightest to take risks. That is spreading globally, and as it spreads globally, we want to spread globally. So my mission is really to become the most valuable venture capital firm on the planet. And that means we have to be international. And so that's where we're at in our journey. So we're a venture capital firm, Amir, but we're also a tech company ourselves. We have big ambitions to grow our business and serve more people and create more value.
I love that. Yeah, the more I'm hearing you speak about the company, you sound like any other founder I have on. Just happens to be you're a founder, a part of a venture capital that has a different model, and I think that's kind of interesting because I always don't get that flavor. So it's a pretty fantastic outlook. I appreciate that. Well, I definitely appreciate your time. Thank you for coming on and sharing with us. If somebody wants to learn more, if somebody wants to ask a follow-up question, I mean, we covered a lot of ground. Is there a good way of connecting?
Yeah, just go. It's really easy. av.vc. Just come to our website, and there's places there to book a call with us. Again, because we're retail oriented, we make it really easy for people to talk to us or just join our syndicate and start seeing the deals that we're doing to get a flavor of, the quality. We're designed to talk and communicate with the retail investor. So would encourage people to check us out.
Love it. Absolutely. Mike, again, thanks for coming on. Thanks for sharing.
It was good. Look forward to our next talk.
Absolutely.
Thanks, Amir.
Definitely. All right. That's it for this episode. We'll be back again. Different guest, different topic. Until then, two things. One, the mission of democratizing the opportunity to invest in the venture world is fantastic. We learned a lot from Mike about Alumni Ventures, how they approach the VC market, how they approach particular investors that otherwise you would not have access to. So actually go to the website, learn more. This is a great opportunity to see if this might be, a company that you can learn more about how VCs work and how the opportunities get extended to you. Obviously, do your own financial due diligence. None of what Mike mentioned or I mentioned is financial advice, but also super interesting just to learn more about the opportunities out there. Also, like, subscribe, comment. Let me know how the show's going for you. Until next time, thank you and goodbye.